So here is the next video that I want to show you on the place to park your money. So this is the place that I park my money, and why. Let me tell you why. So let's go again and look at it. Again, I do what? I make money and I do this. I pay the taxes on the money and I park it right inside a permanent life insurance policy. But this is not like your traditional permanent life insurance. This is not the same type that your grandmother has. This is a different type. This is the type of life insurance that has living benefits. Living benefits. So we're going to talk about the benefits of that. I know you never heard this before, but let's look at the benefits of life insurance. So here's the tax deferred growth, right? Tax-free distribution. That's the vehicle that has that. Competitive return, high contribution, additional benefits, collateral opportunities, safe harbor, no loss provision, guarantee loan option, unstructured loan payment, liquidity use and control. Life insurance has all those benefits, has more benefits. Even the deductible contribution, I can turn it on. I have the secret juice to turn that deductible contribution. That's for a separate conversation, but I know how to turn on that light to have you able to deduct the premium you put into life insurance. But check this out. What are the things to consider when you're purchasing a life insurance that you want to use as a place to park your money? Well, there's riders that you could purchase from the insurance company, and it's available at additional cost. So it's like you buying extra stuff on your car. So those are what we call riders. Now, some companies pay dividends, some don't. Well, once dividends are paid, if you're lucky to have companies that pay dividends, then that's awesome. They become guaranteed cash value, okay? And that's money that you can access in your plan. Cash value grows tax deferred. That means the interest you're earning on the money, you're not paying taxes on that money. So which allows your money to compound free of taxes. So that's a big deal. That's the same thing like we have with our 401k, compounding interest, tax deferred growth, right? When I talk about compound interest, I don't mean the tax deferral. When I'm saying compound interest is fixed account, fixed interest rate that you're earning on your money, but you're not paying taxes on that money. So understand that. Loans are loans a contract feature. Contract is unilateral, and provisions can only be changed by the owner. You, the owner, can make the change. So you could get a loan from the company, and you could make changes. You could decide what type, how you want to pay back, and all that good stuff. Loans reduce access to available cash value by the amount of the loan. Yes, it does reduce the amount of the cash value that's available to you. So what do I mean? Well, because you're using it as a collateral. So for example, let me pull up this real quick, kind of share that, because you need to know this, because people bring that question up. So if I want to take a loan from my life insurance policy, I want to pull money out. There's two ways you can take money out of a life insurance policy. You could do what? You could withdraw the money, or you could borrow against it. That's what they call a loan. So you're using the life insurance policy as a collateral. The insurance company puts a lien on it. So if you pass away, what would the insurance company do? They will immediately pay out the death benefit plus the cash that's in the policy, depending on how the policy is designed. But the remaining balance, what you owe them plus interest, that's the blue. They take that. That's the reduction of the amount. But you've already spent the money. So why are you concerned? You've spent it, right? You can't take something that you spent already. So that's it. So people argue about it. I just don't get it. But fine. At least now you know. It's clear. It's transparent. You see it. So you can make your own decision and see if what they're saying to you is what it really is. All right. So I just want to kind of make that clear. And then death benefits are paid income tax free and are reduced by outstanding loans or withdrawals. Like I just explained earlier, if you take the money, if you take a loan out, when they pay out the death benefits, if I have $100,000 death benefit, and I have 20,000, depending on the kind of policy, because there's different types of cash value life insurance, and you take out $20,000 loan. So depending on the policy, your family might end up getting $80,000. Right. So what? You took out 100 grand, right? So they'll get 80,000. I mean, what do you want them to do? Give you back 100,000 when you already took it out? So that's what that means. So it depends on how the policy is designed, and there's different ways to design it. So that's why it's so important to work with a financial advisor that is very, very familiar with this system to be able to help you structure it properly to benefit you, not the financial advisor's pocket, but to benefit you. All right. And then cash value deficit during initial capitalization funding period. So as you started, there might not be enough cash value starting, depending, again, very, very important, how it's designed. You need to know how it's designed. So that's some of the things about life insurance, cash value life insurance. So I wanted to kind of show that so you kind of see the full factor of all the different places you can pack your money and still do all the things you want to do. Always remember, your money needs to be protected. It needs to be safe. It needs to be earning compounding interest. It needs to be growing. You do not want a situation where creditors can attach and put a lien on your money. The IRS can come in and take your money. You do not want that. You want a position where your money is safe, just like your house garage. It's packed, it's safe from snow, from sun, from vandalism, all that. Well, do the same for your money. You're doing it for your car, you need to do it for your money. So again, I want to thank you for taking the time to watch these videos. I appreciate you. Let's continue to grow and build together. Share the video, like the video, and God bless. Thank you. Bye-bye.